What's something I used to believe about mortgages that I now know today is false? That the lowest interest rate always saves you more money. Here's the truth. It's not about the interest rate. It's about the strategy of how you finance your home. Because you can have a cheaper interest rate, but still pay back the bank an extra hundreds of thousands of dollars in interest on your mortgage. My name's Sean Uehara. I've been a mortgage lender almost 20 years, and I teach my clients every single day how to pay their homes off quicker, build some wealth, passive income, and really get to financial independence. So if any of those things resonate with you, make sure to save this video and follow me so you can learn these strategies every day. The client that I'm going to show you is going to pay her investment property off in 26 years and an extra $185,000 in interest. Our strategy using the first-lien HELOC, we're paying the home off in 5.1 years, saving her $112,000 in interest. She owed $340,000 on her property. She has a 3.625 interest rate that she's had for 4 years. So remember, we're comparing this to a 3% mortgage. Our HELOC is at 8%, so more than double the interest rate. But the way the interest gets calculated on a HELOC is based on your average daily balance, not your amortized mortgage. So don't confuse the two. So many of you hear that the rate is higher on the HELOC and you totally dismiss this thing. Watch this video to the very end. She brings in $10,000 a month. We've got 15 grand in her checking account. Now remember, we treat the HELOC like we would our checking account. Any dollar that we earn, ideally you want to move as much of it as you possibly can into the line of credit. Every deposit you make goes towards principal balance being reduced, which reduces the interest charge. So we've got $10,000 going in every month, pays all her bills and expenses from the line of credit, and she's got about $5,000 left over after everything's covered for the month. And you can see here on the right side, it's her current mortgage, 26 years, paying $185,000 in interest, and we're going to refinance into this loan at the same $340,000 balance, okay? Paying it off in 5.1 years, saving her $112,000. So if you were to take the interest savings, 112, 643, we divide that by 61, we're saving her $1,800 in interest per month, which breaks out to about $22,000 a year. And again, because we're calculating interest daily, I still have a higher interest rate than what we initially started off with, but we're only paying $72,000 in interest on the mortgage, which gives us an effective APR of 1.3%. You got to understand the effective APR part because that's what you're truly paying back on interest to pay off that loan, not the 8%. It's the equivalent of you having a credit card at 30%, but you paid it off that month. Did you really pay 30% in interest? No, you didn't. This is the disturbing part. 61 months, our loan's paid off at a 3% rate of what we're comparing to. They would have only paid $43,000 down, still owing $296,000 on this house. That's how much money the bank is literally tearing out of your pockets every single month because they got you so brainwashed to take the lowest interest rate. And you don't want to learn things like this to get you out of the mortgage rat race so you can really start building the future that you want. So the belief that I have today, strategy is more important than the rate. If you want to see how fast you can pay off your home, DM me or comment below and I will teach you how to do this and we can see how fast we can pay off your mortgage.